particular company. We have Orient Cement, which is the first management on the show. The company reported what was a mixed set of numbers. The sales volume came in weak, while the margins came in healthy this time round. To discuss this and more, we have with us Deepak Khetrapal, who's the MD and CEO of Orient Cement, who's joining in to discuss the numbers and the quarter gone by. Mr. Deepak Khetrapal, thank you very much for taking the time out. Well, I just wanted to start by talking about your realizations, which are flat on a Q-on-Q basis. How much of the mix was, premium sales this time round, and what led to this flattish performance in terms of the realizations?
Thank you, Ekta. First of all, let me clarify that when we say flat realizations, we are one of the very few companies in our industry who have actually been able to maintain our realizations over last year or over the previous quarter. So, and that I think is perhaps an outcome of the very cautious policy that we've been following rather than chasing volumes. We try to sort of in a way get a certain minimum amount of contribution margins on our sales. And if the orders are not offering at that our threshold margins, we refuse to do that business. If you look at the industry performance, like I said, we are one of the rare companies who maintained the realizations and also profitability. Despite 15% drop in sales volume, our profits are almost flat over last year. So that I think is a credit to our strategy that we've been following. Yes, the loss of volumes is a concern, and we would address it based on how the pricing looks. And we're also looking at, maybe monitoring it very, very closely. Now, one relief which I think our investors would have from hearing this, while we are giving up volumes based on margins in the B2B market, in the B2C market, as we call it trade sales, we are actually maintaining our market share. But on the B2B markets where large customers are there, they are hardly loyal to you. You give them a good price, they will come back. So that's the nuance in how we are picking up our customers and markets.
Incredibly nuanced view out there, Mr. Khetrapal. Always a pleasure speaking with you. If you could, help us with just three numbers. One, how much is value added as a proportion of your sales currently? Last time you said it was 22-23%. And in light of this strategy that you're using, realizations over volumes, what's your updated guidance on volumes and EBITDA per ton for the remainder of this year? So value added as a proportion of your mix, volume guidance and EBITDA per ton guidance for the year.
So the good news is, despite 15% loss in volume, my premium sales have actually been very stable, and over the 21% that I had reported in the previous quarter, I'm happy to say in a poor quarter also the premium sales that has been just 23% of trade sales. So that strategy seems to be really, really well in place. In terms of the volume guidance, quite frankly, this perhaps is the absolutely incorrect time when the markets are actually seeing no volumes, at least in the market that we are exposed to. We've had extensive rains all across our markets in Maharashtra and in Telangana and Karnataka. As of now, I think I'll hold my views on what margin direction we want to give to the investors. But all we can tell you is that we will be chasing profitable volumes. We'll be chasing more premium volumes all through the place. But too early to give me for me to give you the annual guidance. This is just the wrong time.
Okay. When would it be a good time? When do you think you'd have visibility? By next quarter?
Yes. The moment monsoons get over, I'll tell you why the monsoon demand is weak, not just for us, for everybody in the market, right? The good part is that once the monsoons get over, there's a lot of pent-up demand which hits the markets. One, for construction to catch up with what was not possible during heavy monsoon. Secondly, there's a lot of repair work to infrastructure and housing that becomes necessary because of very heavy rains. So these two factors typically give us much better demand in Q3 than we normally would have. Having good monsoon in India always is good for the second half of the year. So we are looking forward to that.
All right. But, could you give us a sense of how pricing has panned out? Because there were expectations of a mild increase, at least post-elections ahead of monsoons. Typically, monsoons, we don't see much price increases. How have prices changed for the industry and for you post, in first quarter? How do they compare with the previous quarter?
Yeah, so Mangalam, that's a good question. Normally, we would see that Q1 should have had much better prices, but the prices, one, the demand was weak. Secondly, I think some of the larger players in the market are preferring to choose volume, so they are reducing the prices. So prices have been weak. In Q1, where we reported stable, every other company is actually reporting degrowth in pricing. And July, I can mention that July prices are further down below even the Q1 prices that we've had. So pricing is a matter of huge concern right now, along with the volumes.
Would you be able to quantify the difference between July pricing and what the average in first quarter was?
It's about 10 rupees a bag.
All right, 10 rupees a bag lower.
2.5%.
Okay, that's... Go ahead, Ekta.
Okay. Mr. Khetrapal, just on that sense that you're going to probably get more visibility in the second half, what exactly is the capex lined up for FY25 then, based on what you are saying when it comes to pricing, based on what you are saying when it comes to visibility of demand? How much do you think you need to add on in terms of capacity addition? What are you spending on that?
See, capacity addition, Ekta, as you would know, is a longer-term view on the business. It's not driven by how 1 quarter or 2 quarters look. And when we start adding capacity, 15, 18 months are the bare minimum time before the capacity comes online from the time we start construction activity, right? So from that perspective, our capex is more governed by we having all the necessary clearances in hand. We need to add capacity at our Karnataka plant in a hurry. I mean, last 2 years, we've been selling nearly full capacity from that plant. And as far as we are concerned, first of all, we are chasing, and our application for environmental clearances are already on the portal of Ministry of Environment and Forest. In the next 4 to 6 weeks, we expect to get the environmental clearances. Post that, we'll start construction activity fairly quickly. Now that the clearances will be coming in during the second quarter, we are expecting that by the end of the year, at least at Chitapur plant in Karnataka, we would start the doubling of capacity project that we've been chasing.
Mr. Khetrapal, where you operate in the southern part of the country, there is a fair amount of storm and you're in the eye of that. A lot of acquisitions taking place, a lot of consolidation out there, and a lot of clamor for market share, so to say, as well. And in that, a lot of people are looking at your asset as one of those prized possessions too. I mean, I remember having spoken to Parth Jindal just 2 weeks ago, and he did say that they are looking at a lot of capacity increase, closer to 60 million tons by the end of 2030 is what they're seeking. There have been multiple reports that there is a jostle for Orient Cement between either Adani's or the Jindals. Would you have any comment on that, or are you not on the block?
Look, as far as I'm concerned, there's so many people eyeing us at a good asset. I think it's a compliment. We are recognized in the industry as one of the most efficient players, one of the players who has the highest amount of premium sales cement in the market, at the highest premium in the marketplace. So we are a good asset. That's a compliment. As far as the jostle for that is concerned, I'm blissfully unaware of all that. So it's perhaps happening at their end, not at my end.
You're a good asset and you're on the block. Would that be the correct assessment?
I am a good asset which people might be eyeing. I'm not saying we are on the block. Please don't put words in my mouth. I've never...
No, I'm glad you clarified. We were just, clarifying those interpretations.
Okay, so I'm sure you are not in the place to comment on that as well, Mr. Khetrapal. You probably wouldn't be as privy to it, or if you are privy to it, you're not going to let out on it. But if you could just give us a sense in the analysis of the South Indian market before you let us go. Before we let you go, in terms of pricing, considering the kind of consolidation that is taking place, what do you anticipate, at least in the next couple of months? Do you think that that pricing is going to get far more aggressive? If so, to what extent? And what would the new dynamics of the market be as well?
Well, as of now, the prices are under tremendous pressure. As I'm sure you heard that earlier. I've told you July has been even worse than the first quarter. So the prices will remain under pressure. The only way prices can improve is once the demand comes back to the strength that I spoke about. Till that strength in demand comes back, obviously the prognosis always the price will be under pressure because some people will chase volumes, right? So for the next couple of months that you spoke of, I think it's going to be a difficult time in South India. But as I mentioned, personally, I do expect volumes to pick up once the monsoon gets over. There's a lot of pent-up demand that we're expecting to come in. And that will be the time to perhaps look for some improvement in pricing in the market.
All right, we will close in on the volume guidance once we speak post monsoons, post the second quarter perhaps. there will be better outlook that you will have in terms of what the EBITDA per ton as well as what the volumes could be. But for now, you are happy with the premium positioning that you have with the kind of realizations, choosing realizations over volumes. We'll keep an eye out on the pricing, but more importantly, we'll watch out for what takes place in the southern part of the country as well, where there is a fair amount of clamour for market share and capacity. Thank you so much for joining in. Yes, please go ahead.
Profitability, let me remind you, we are the only company in the whole industry which has reported improvement in EBITDA per ton over last year. The only company. So
that's true. And
look at our focus on profitability more than growth and volumes, because I think that we are playing slightly contrarian game to the rest of the industry. And
that explains why you're a good asset as well. That explains why everyone's eyeing you.
Thank you so much. Thank you. Appreciate that.
All right. Always a pleasure speaking with you. Take a short break, come back, get you more on the markets and a lot of stocks that are moving around this afternoon. Stay with us.